Hello, welcome to our latest webinar where we're going to focus on how you can make more money at the till. And what we're going to focus on today is the power of EPOS integration, of integrating your EPOS system, in particular with your back-end finance system, and how we feel that will make you a more efficient business and a more profitable business overall. In terms of introductions, my name is George Smith, and I'm the Managing Director of Cameron Computers. I'm a part of the HBP group along with our sister company HBP Systems, and we've specialised for many years now in EPOS solutions, our own case EPOS. But its unique selling point and something that we always value is its deep integration with the account software that ultimately runs that business in the back end. In terms of my own background, before joining Cameron, I was and still am an accountant. So I worked for many years in different businesses, visiting, performing financial audits and reviewing their controls and procedures, and worked with many retailers and those that use EPOS, from smaller owner-managed businesses right up to some of the larger PLCs such as Greggs, the bakers. So I've seen many different retailers and many different businesses using different EPOS systems in good ways and bad, and I've tried to apply that experience to the way we develop our products here at Cameron at HBP, and really the message that I'm trying to put across in this webinar today. So in terms of an agenda of what we're going to cover, as I've already mentioned, I'm going to really focus on the power of integrating your EPOS and the value that can bring to a finance system. So I think it's fair that I start with addressing the importance of a finance system and why I think that's absolutely crucial to your business. The future of your business, the success or failure of it, really depends on that finance system and the information that it provides to the decision makers in the business. And then once we've answered that, it's a much stronger argument of why I believe that the EPOS, what is essentially the front end of your business, that's first point of contact for your customers, that's collecting your cash and recording your sales, why I believe that's vital that information is integrated with the back-end finance. Once I've sort of covered that, we're going to look at the common barriers of why people don't maintain all their data in their finance system and why information doesn't flow freely into that accounts package. Some of the common barriers and the reasons that when we're working with businesses for the first time and visiting clients, the common barriers that we see and the restrictions that mean that data isn't flowing freely throughout the business. And then I'm going to go on to the power of automated integration. So it's not just about almost addressing those barriers through what I believe is the best way to deal with this automated integration. Removing the human element to this will remove those barriers and mean that you've got data moving from your hugely important front-end EPOS system to your hugely important back-end finance system. And then some of the practical benefits of that, so the real-world benefits that our customers and people who are following our advice are seeing day in, day out now because of the information that's flowing between these two systems. And it's important to note that when I'm talking about this integration and when I'm talking about data flows, I'm not just talking about collecting data at the EPOS and pushing it into the finance. This is a two-way integration, and that's what I'm going to cover in the final section on how to make this happen, how to make this integration happen, and what I mean by an integration. I'm going to go into a bit of detail here on the really valuable information I feel should be flowing between these two systems if you're going to maximize profitability, if you're going to maximize efficiencies in your retail business. So that first question, why a finance system is so important and the best place to maintain your most valuable business data. I think all we need to do for this is sort of address this question. Why does a business fail or succeed? In my opinion, you can simplify this, you can boil it down to three core areas that determine success or failure. It's these: it's sales, it's cost, and ultimately it's cash flow. If sales aren't where we expect, we struggle. If costs can't be controlled, we struggle. And if a combination of those two and poor cash flow and poor management of certain aspects of the business, we end up with cash flow problems. And that's ultimately the nail in the coffin. If a business fails, it's because it hasn't managed its cash flow. So I'm sure most people would agree with that as a broad argument, a broad concept, that that we maximize sales, we control costs, and we keep cash flow as efficient as possible and as high as possible, then we're going to have a successful business. So when you translate that into information, so okay, these are the things that we need to get right. So these are the things we need to know about. These are the things we need to report on and to be able to act on and behave on. Well, what sort of information do we need then? Sales, we need sales data. We need the information of what we've sold. But alongside that, that sits directly next to that is customer data. So not just we've made this sales today, but who have we made that sale to? And did they pay their balance all in one go, or do we need to collect some money off them? Cost data is obviously all around purchases, and closely linked to that is stock data, particularly in a retailer. It's going to be a huge element of your cost is the cost of the goods that you've just sold. And then ultimately a combination of those two, customer data and stock data, is what gives us visibility of our cash flow. They're two of the driving forces behind either a good or a bad cash flow. From a customer point of view, if we're not collecting our debtors, if we're not collecting our debt, then we're going to have cash flow problems. We need to know who owes us money, how old that is, why they owe us that money, and why it's not being paid. From a stock point of view, it's all about stock is an investment of cash, and we need to get it off our shelves and we need to turn it back into cash as quickly as possible. For retailers, that's probably going to be the biggest out of the two of these. From a customer point of view, in many businesses, we're collecting our cash on sale, but not true in wholesalers and trade counters. So there's plenty of environments, retail environments I'm working in, where the customer data and the balances owed from customers is a significant proportion of cash flow. But in all retailers, we find stock data and stock levels as a huge factor on cash flow. So based on that, based on these being the three core reasons why a business succeeds or fails, and this is the data that sits beneath all three of those components, it then becomes very obvious that we need visibility of these. We need to be able to see if anything's going wrong, see if things are going well to maximize them. So naturally, it becomes clear that a finance system that reports on all of this data is the way to go. And too often, we get stuck with either just the sales data and purchase data in the finance system. We don't have the visibility of the stock or the customer data, for example. And soon as this information is collected in different systems and different parts of the business, and it's not flowing into the finance system, that's where we get a lack of visibility, we get a lack of control, and we can't make, as decision makers, informed decisions on these three core components that ultimately are going to drive our business forwards or cause us to run into difficulties. So then it becomes obvious, of course, we want all of this valuable information in our finance system as quickly as possible so we can report on it quickly, we can act on it quickly, we can make decisions. Why doesn't that happen? So when I'm going to our customers for the first time, these are the reasons why this isn't happening. And this is the reason they're facing challenges right now. The first one, probably the most obvious one, is time consuming. If we're collecting all of our sales information in the EPOS system, and we're collecting all of our stock information through a stock management or warehouse management system, then that's in separate places. It's used by people who are different from our finance team. It's in a completely different installation. It's in a different database. It's installed in a different area. The data looks different. It doesn't match with our finance data. So we have to manually move it across, and it takes time. Take, for example, a simple sale. We register that sale in an EPOS system. At the end of the day, that needs to be keyed in as a sales invoice into our accounts package, let's say Sage. That takes time. Some of the businesses I'm working with, when we've come in and have had unintegrated system, it's common for sales to be a month behind actually being entered into the finance system. I'll go into a few sort of real life examples later on, but essentially, even if that information is getting in, it's taking a long time. So it's immediately losing its value, it's losing its worth because we can't react to real-time data. Another major issue, vulnerable to risk of error. We're using humans here. They're our biggest risk of error. The statistics are it's about 1% of human involvement will result in an error. So you might think that's not too bad, 1%. But ask yourself this, are you comfortable with 1 in 100 of your sales reaching your finance system with an error in? Are you comfortable with 1 in 100 of your refunds reaching your finance system with an error in? Are you comfortable with every stock movement that goes through your business? 1 in 100 will have an error. This really undermines the credibility of the data. It means that management lose faith in that information that's coming into the finance system, and at the end of the day, it's probably wrong as well. So risk of error is a huge reason why information doesn't flow freely between systems in our business. And then more generally, there's just this problem of inaccessibility, because that EPOS system in the front end is very different to our finance system. And vice versa, the finance system is very different to our EPOS system. So our EPOS users don't have the foggiest on how to use Sage 50 or Sage 200 or Exchequer or whatever it may be. They don't know where to look for the information they might have needed, even if they could access it. And then for the finance team, they don't know how to use the EPOS system, and that data looks different to theirs. It's got different references, it's got different descriptions, so they don't have the visibility. So we have this real issue across the business when they're using multiple systems that you absolutely need. You need these different systems for the front end and the back end of your business, but because they're not integrated and because they're separate, people just don't get access to the information they need. So it doesn't flow. We're not even aware of the information we might want because of this inaccessibility. So what's the answer to this? In my opinion, I feel very strongly about this. The answer is automated integration. Cameron and HBP, we feel very strongly that the way to make your business more efficient, the way to maximize sales at the EPOS, the way to minimize errors and make your business a growing business and a better business is to automate that integration and that data that flows between these two vital systems in your business, the accounts package and the EPOS. And this isn't a one-way integration. We're talking about a two-way integration that's automated. So all of those barriers that I just mentioned there, that risk of human error, that time-consuming element, that inaccessibility, that finance don't know where to look in the EPOS and retail staff don't know where to look in the finance, we remove that altogether. I think the best way to sort of talk through this is to give you an example of a common situation we see when we come into a business and essentially what we replace that with. So in an unintegrated system, and let's say we've got a trade counter here or something like that. What we've got here is we make a sale, and we're in a trade counter here. So let's say we're in a plumber's merchant, and we're selling a bathroom to a plumber who's kitting out a bathroom for one of their customers. So the plumber comes in and picks a bathroom and goes to sell it through the EPOS system. Well, in this trade counter, the first thing is that all our customers that are regular repeat customers have special price banding. Our most platinum customers, they get the most discount, say 25%. We then have gold ones at 20, etc., compared to if the public come in and they pay full price for things. So first of all, the employee's got to check, right, this is Mr. Plumber Bob, and he's got 25% discount, so I've got to go and check that in some sort of file to make sure we apply the right pricing. And also, because this is a trade counter, we're going to sell it on credit. They're going to get 30 days credit terms on this bathroom. So again, we've got to go and have a look in the finance system or wherever we keep records of our customer data to see what his credit limit is and if he's got enough credit before processing this. So straight away, we've got a few barriers and problems here. There's a risk of error in terms of all of these aspects here, because we might pick the wrong price band. Even if we pick the right price band from the information we've been given, we might enter it in the till wrong. We might get the credit limits wrong. We might not look in the right file. This could be time consuming. Mr. Plumber's got to go and fit a bathroom, and he's waiting for us to make all these checks and then manually put it through the till. And then from an access point of view, does the person on the till even have access to this information? Are they going to have visibility in the accounts package of the credit limit and how much of that credit's been used at this one point in time? We don't know, probably not. So straight away, before we've even put anything through the till, we're already hitting these barriers because information is in two separate systems, as it needs to be, and it's taking time and it's producing a risk of error. We then get all that settled up and we put the sale through the EPOS system. Great, and Mr. Plumber leaves with his bathroom. Problem is, we've got unintegrated systems here, so we've put it through the EPOS system, but the accounts package knows nothing about it at the moment. So we've created ourselves some more work. Our stock levels need to be reduced, and the cost of that sale needs to be put through the finance system based on the point of sale record. So, you know, one bath is now out of the building. We've got to reduce our bath stock by 1. We've got to reduce our tap stock by 1, etc., and recognise the cost of that. And obviously, the flip side of that is we've got to recognise the sale. We've got to raise a sales invoice in the finance system based on the EPOS records that we've created. Again, risk of error. Are we going to do this absolutely correctly? Because we're going to have to manually type from one to the other. It's going to take time. It's going to be time consuming. So when is this actually going to happen? It's probably not going to happen at the point of sale straight away, because it might be someone else who does this, or it might be done the next day. Again, going back to a customer story that I worked with late last year. It was a trade counter environment, and this chap put all of his sales through and created all the receipts and printed them out. He had them in a big stack behind the workbench, behind the till, and then when he got time, he'd ring them all through Sage 50, create the sales invoices, and post them out to his customers. When we were having the meeting, he explained this process to us, and he said, I try to keep on top of it. And we said, well, how far behind are you at the moment? He said, well, it's been a busy while, so I'm 3 weeks behind at the moment. So he had a stack of EPOS receipts where 3 weeks worth of sales that Sage 50 didn't even know about yet. That also means that he hadn't even created the sales invoices. He hadn't even sent it out to his customers. Even if he's working on 30-day credit terms, he's nearly used up all his standard credit terms before he's even sent them the invoice. So he's having a massive impact on his cash flow. He's having less time to chase, he's having less time to flag up any potential issues, all because he's created a manual job that he just couldn't keep up with. And then we get to the next stage. So yes, we've created the invoice, we've posted it out to our customer, and then we've got to chase it. And that becomes, again, another manual time-consuming process to collect that payment and chase that payment. And then when all this has been done, it's happened hundreds and hundreds of times for every single transaction, we then have to review that data as management and make decisions, because that's what it's all about. We're putting all this effort in, we're putting all this work in. So we've got some sales data, some stock data, some customer data, so we can make informed decisions. But you've got to ask yourself, when you're going through this process, how quick can you really be at getting that data in a position where you can review it? And also, there's a question of integrity there. What you'll find happens is that management or the finance team have to put extra checks in place. They have to reconcile things and take a lot more time preparing the data because of the risk of error, because things are happening at a time lag. So it becomes a very inefficient and slow process, what probably means that you're reviewing your management accounts a month later or a quarter later than you really should be. So this is a very common situation we come across with an unintegrated system between EPOS and finance. And hopefully you can see already all the inefficiencies there. And when I'm talking about making more money at the till, it's not all about just selling more. It's about the inefficiencies in your business. And we'll get into some of the ways you can maximize sales later, but hopefully you can see there, there's so many risks, so many barriers to you running your business efficiently because you've got an unintegrated system. Now, let's compare that with how we'd suggest that the same process should go with an integrated system, with an automatically integrated system between EPOS and finance. Mr. Plumber's back in now with another bathroom to buy, and we identify him straight away, perhaps through a loyalty card or just through his name and postcode, and we identify him as a customer on our till. And we're also directly identifying him as a customer in our finance system. That means that the EPOS can read straight from the finance system any customer-specific pricing that's attached to this customer, and look through all the transaction history and his current credit limit to work out exactly how much credit they've got left at this point in time. The risk of error has been eliminated. There's no manual process involved. The amount of time involved, it's seconds rather than minutes or whatever it might be to look through different files and work out how much credit we can give this person. So our customer experience is maximized to the best possible level. And from a data access point of view and what the person at the till can see, they're getting the information they need without actually having to go into the finance system and look into areas that they may not be familiar with, or may not know where to look, or may not be allowed to look. They're getting the information they need for this customer at this point in time without having to go into a separate system themselves. The sales then put through, we sell the bathroom on credit again, goes through the EPOS as usual, but automatically at this time, a sales invoice is raised in, let's say, Sage 50, raised in the finance system and emailed to the customer immediately. So straight away, we've got traceability per sales invoice because we're posting an actual sales invoice per EPOS transaction straight into Sage. We're emailing that customer straight away with the invoice, so there's no lag. We're going to be maximizing our chance to collect our debts on time. And at the same time, stock's going to be reduced by 1, and all the journals in terms of costings and sales are posted straight away. We've eliminated the risk of error. We've reduced manual labour and employee time to nil, and we've got a far more effective way of recording our sales. Just focusing on that idea of updating stock automatically, this becomes even more important if you've got multi-channel sales. So if you're selling online as well, so as a plumbers merchant, there's no reason why we wouldn't have an online store as well. And that's feeding off the same stock data essentially. It's meaning we've got as close to a live stock picture as possible for all our different sales channels. It means that the risk of overselling when we're stocked out, or not selling something because we thought it was out of stock, all those risks are reduced or pretty much eliminated because we're updating our stock in real time as transactions are flowing through the EPOS. Just following on to mirror what was happening in the unintegrated one, it doesn't stop there because we've now got a proper sales invoice raised in the accounts package. What's been emailed to the customer, we can then trigger automatic reminder emails sent to the customer just before the invoice is due to make sure, yes, you've definitely got a copy of that invoice, remind them it's due for payment, and then we're maximising our cash flow, maximising our chance of collecting that debt on time. And then from a reporting point of view, again, what this is all about, getting that information for management to make decisions and run the business better, they're getting that live out of the system. They're getting that as quickly as they want it. And they've got a lot more trust because they know it's all automated. They know it's relevant, it's current, it's on time. So not only are they making more informed decisions because the information is detailed and accurate, but they've got a lot more faith in it because the risk of human error has been eliminated. So hopefully, as a comparison, as a bit of a storyboard of how the process can be different, it's already becoming really obvious the efficiencies and the changes that this could bring to your business by integrating the EPOS with the accounts package. So what are the real world benefits? What are some of our customers seeing from applying a system like this? And we've already touched on a few of these, but to really hammer them home. The most obvious one that I've probably covered mentioned quite a few times already is improved reporting. And it's not just a case of we've got more information, it's that it was less time consuming to prepare because all reporting is a balancing act. It's the value of that information versus the cost of producing it. So we're minimizing the time to produce it so we can get it quicker, we can get it more efficiently, more cost effectively, and it's more accurate. We can get it more detailed. One of the most common compromises we see in unintegrated systems is that it just be far too time consuming to put every single EPOS transaction line by line through the accounts package. So what we do is we make a daily journal or a journal per till, something like that, for the total sales and the total costs that have gone through that till. So yes, the correct information overall is in the system, but we haven't got it at the level of detail that could mean some really valuable reports and some really valuable insight could be accessed. So we know it's more accurate. And then we know it's in real time because it's automated. We're taking out the laborious element of it. We can have this information as quickly and as efficiently as we want. In terms of reporting and some sort of useful reports that I see used very often once people have and businesses have implemented these systems. These are just a few of them. We could probably spend a full hour and a full webinar just on KPIs and reporting for retailers, but here's a few that I think are only really accessible and only really a viable option once you've got automated reporting. Things like revenue per sales center. So if you're establishing a sales center, could be anything from a person, so per employee, per till, per store. You can only do this and really drill down that level of detail if you're recording sales per transaction and you're gathering all the information of a transaction. So which member of staff put that transaction through, which till did it go through, which store was that till in at the time. All that information needs to be gathered at the point of sale, and all of that needs to automatically be transferred to the finance system if you're going to do reporting like that. It's far too ambitious, far too time consuming to try and do this sort of analysis if you're doing manual integration. But there's quite a few there of different reports that you might want to have a think about and ask yourself, without an unintegrated system, are these really achievable? Do you really have the time or the resource to do it? That information isn't flowing freely into your finance system. Improved cash flow, and again, we've touched on this one, and going back to those fundamental reasons why a business succeeds or fails, ultimately it comes down to cash flow. And in retail, there's two main risks to your cash flow. Debtors, especially if you're selling on accounts, if you're in a trade counter environment or a wholesale environment where it's not a case of settling up cash there and then. But probably the biggest and the most common one that all retailers face is stock levels and tying up too much stock too much cash in stock. For retailers, it's all about finding that balance. We don't want wastage. We don't want to overstock and have too much that we have to throw away or discount, but we have a huge fear of sellouts or stock outs. The analysis from the US recently is that stockouts, if they were removed and no one ever sold out of stock, the average retailer would add 7% to their revenue. So they're basically missing 7% of sales every year because they've sold out of something that a customer was there and then wanting and demanding. And that's a huge risk to your business because once you lost that customer for that sales opportunity, you may lose them for life. So retailers have got a constant battle around cash flow, finding the right balance in their stock levels, and it is really a difficult balancing act. What an integrated EPOS system does is it at least gives you faith in the information you've got. You've got full visibility of stock on hand, and you've got faith in, right, that's how much I've got in right now. It means that you've got a lot better position to be making purchase order decisions, making sure that you are actually satisfying demand. So a common one is you haven't got it in this store, but because you've got an integrated EPOS to your accounts and you can see stock across the business, you can immediately see, oh, we've got some stock in our store across town. Can I get you? Can I put that one on hold for you so you don't miss the sales opportunity? So by having an integrated system, we can control stock far more effectively, and means that we can maximize our cash flow to the best possible level. So there we go, leaner stock management and faster debt collection. When we went through that example of automatically creating the invoice and sending it out to the customer, that's how we can maximize our debt collection. And again, to re-emphasize that, when stock levels are live, when we can trust them, then we can be leaner with our stock. We don't fear overstocking or understocking because we've got faith in the balances that we have. Before I get to this calculation, just tell you a little story about a customer I did work with a year or two ago, a pretty large customer, around £30 million turnover, a wholesaler, and they had no visibility of their stock once it entered the building. So they bought things in, and then for them it was as good as gone. All they did is on an annual basis for their audit, they did an annual stock count, counted everything and gave it a valuation. No integration, no visibility of stock throughout the year. Now, when we looked at their most recent accounts, when we're talking to them, so £30 million of turnover, they have £15 million of stock at year end. So that basically means 50p of every pound of revenue is tied up in stock. When we say this is such a huge amount of cash, such a huge amount of your revenue is tied up. What's the reason? We just have a fear of selling out, and there's so many times because they didn't have visibility, they think they'd sold out of something, so they bought more in, then they went and found it around the back, or it was in a different location because they didn't have any visibility in their finance system. Their accountants and their buyers didn't have any visibility of what was going on in the business. So from a stock level point of view and from a cash flow point of view, this is quite a nice calculation that you can take away and try yourselves. And essentially what this is calculating is something called stock days. How long on average, and it is an average, but how long on average is stock sitting on your shelves before being sold? So all you do, take your, for an annual stock day calculation, your year-end stock value, divide it by the cost of purchases for the year and times it by 365. And that will give you an average of how long stock is sitting on your shelves. Now, obviously, if you can do this monthly, do your month-end stock valuation divided by cost of purchases in that month and times that by 30 or 31 days, and it'll give you a monthly average that you can keep a closer eye on. But you might be asking, well, how can I benchmark myself against someone? What's a good stock day level? Well, first of all, that really does depend on your industry. If you're in the food industry, I hope you've got a low stock day level, because otherwise you've got a lot of food being wasted. You know, if you're working with perishables, you need stock days around a week or so. If you're working in high-end luxury cars and you only sell a few a month, of course it's not going to be, you're not going to have Lamborghini sat on the forecourt for just a couple of days. It's going to be higher, but that's just part of your business. What I would suggest is, if you can you get any insight into your competitors? If you can see their annual accounts, so maybe some larger businesses in your market or in your industry, get hold of their accounts, perform this calculation and benchmark yourself against the competitors. Another really nice benchmark to use, and I say if you can get to this level, you're in a really good place from a cash flow perspective, is to look at what your average supplier terms are. So if you're normally paying your suppliers for stock on 30 days, 60 days, well, try and get your own stock days below that. And that means you're turning around your stock before you even have to pay for it. So you're really maximizing cash flow. If you can get to that level, you're in a great place regardless of your industry. But yeah, that's a really useful ratio that I apply with a lot of customers to see where they are at the start of the journey with us, and then we apply that later down the line once we've got more faith in their stock levels, because it's automatically being updated from the EPOS, and we always see that come down, what shows a return on investment and an improvement in cash flow. So we've had two of the benefits: one reporting, one cash flow. The third one, and potentially probably the most important, that can get overlooked when we get into the numbers and really focus on the financials. But I genuinely believe an integrated EPOS to finance system will result in happier customers. It will result in better customer service. If we go back to the plumber example at the start, just the speed of being able to serve a customer will be improved because you've got all that customer's information, all of your own information at your fingertips. Going back to the idea of, all right, we're out of stock in this store. If you empower your staff from the EPOS system, they've got full visibility of all the vital data, they're going to be better at serving their customers. So, for example, they can log on to the EPOS system and say, I'm sorry, we don't have any in this store, but I can see we've got some in our branch across town, or we've got some in our central warehouse. Can I hold one of them for you? Can I ship that to your house? You're immediately giving your staff every chance to provide good customer service. So I really do believe giving staff information and being able to access that information quickly will put them in a better position to look after your customers. So far we've looked at why I believe a finance system is so important, why all our information needs to get there. We've then looked at the barriers of why it doesn't happen, the barriers to why information doesn't flow freely from our EPOS to our accounts and vice versa. And then we've looked at some of the real life examples of what an integrated system might mean for you and some of the benefits you could reap. But I guess the final stage is, well, how do you make this happen? And I think it's important here to define what I mean by integration. Hopefully you've already picked up on some of this, that there are EPOS systems out there and there are integrations out there that I really do want you to avoid, because they will not bring these benefits. They will not allow you to grow your business in the way that I'm talking about here. Importing your sales figures on a daily basis from your EPOS into your finance system will not provide true integration. It will not give you the benefits I've discussed here. All it's going to do is save probably a matter of minutes, yes, reduce a little bit of human error of your accountant running the end of day report of your EPOS system and journaling in the sales and the costs that go with the end of day. You're going to save a few minutes, and that's where the integration ends. And quite often we will see EPOS people throwing out integrated EPOS systems that were just doing that because it's not giving you true integration. It's saving you 10 minutes a day, if that. The benefit from true integration, we've got to go back to the start really. We've got to look at all that vital data that I said you need to run a business, because that's what we need integrating. So when we go back to those three components, sales, cost, cash flow, what are we talking about? Sales and customer data, purchase and stock data. That's what's important. So all of that information, I believe, needs to be freely available and freely flowing between your EPOS and your accounts package. So when you're reviewing systems, you need to be asking that. Is my sales data available at both on a transaction by transaction level in both the EPOS and the finance? Do I have access to all of my customer data? Can I, from the EPOS, can I see the credit limits? Can I see a full customer transaction history from the EPOS out of the finance system? Do I have customer specific pricing? Can that be accessed between the two systems? All of this, and we're going to go into some of the specifics that I want you to be asking and looking for in an integrated system. So from a sales point of view, it's not just sales at the end of the day. It's not even just sales till by till or sale by sale. Yes, we do need sales per transaction, but I need you to be collecting from the EPOS sales per product line, sales per customer, per till, per branch, and not just stopping at sales invoices. Do we want sales order integration? If we're in, again, go back to the trade counter environment or any environment where we're not delivering the goods straight away, from the from the EPOS, we want to be creating a sales order, not a sales invoice. So that order can flow into the finance package and then can be fulfilled at a later stage. Returns and credits, how are these handled from an integration point of view? One of the most common reconciliation issues we have in a finance system for a retailer is from returns and credits, because these haven't been recorded correctly. The credit hasn't been put through financially, or the stock that's been put back in hasn't been updated, so we end up with differences on our stock takes. It's far more than just flowing through a few sales invoices on a daily basis. Customer data, and again, it's more than just sale per customer. We're looking at things like credit limits. Have we got customer specific price lists? If we have, we want them in our finance system, and then we want them automatically applied on the EPOS. As soon as we know the customer on the EPOS, we don't even want to even need to, as a member of staff on that EPOS, we don't even need to know about the price list. It'll automatically update the transaction with the correct pricing. Current balances on account, transaction history, again going back to that customer experience and being able to look after our customers. We want our staff to be able to jump on a till and see every single sale that's gone through for that customer. So if they've got a query, if we've got to do a refund, they can get back into the detail, bring up the transaction and make any changes they need. And of course, like contact information and things like that, all of that should be freely available between these two systems. And finally, stock data. So I've touched on this a number of times as one of the most important levels of integration, one of the most important data sets that should be integrated. Stock movements, hugely important. We make a sale, we need to be reducing our stock levels by 1, so our stock is as live as possible. So if it's sold on e-commerce or if we're selling on the phone as well, that we've got one central place for our stock levels that all of our sales channels can feed off. Stock on hand per branch, stock cost and sell price. We need that information, so we're collecting on margins. We don't just want to know our sales per product, we want to know our most profitable products. Stock attributes and categories. Again, these are going to be set up in the finance package. We need these to be available at the EPOS so we can start shaping the behavior of the EPOS. For example, are we going to have discounts per stock category? Very easy to apply if we're sharing that information between the two systems. So that's it in terms of today's presentation, today's webinar. I hope what I've been able to show that when we've called this make more money at the till, it's more than just maximizing our sales. It's about being more efficient, being smarter with our EPOS. And my way to do that, the biggest win you could have in your business this year is by integrating your EPOS and your finance. You're going to make your staff more empowered. They're going to have be able to give a better customer experience. But for you as a business and you as decision makers, you're going to be able to make so many more decisions quicker and more effectively because you've got the right information at your fingertips. You're going to know which product lines to push. You're going to know which tills are performing or which members of staff are performing and not performing. All of this can make a huge difference to your business because you've integrated the two systems. And hopefully I've been able to define there what I mean by integration. This is so much more than just a high level import and export of sales figures or stock data on a time basis at the end of the day. That saves minutes. What we're suggesting here, this level of integration, it can truly revolutionize your business. It's so much more than just saving a few minutes. If you do have any questions, we'd love for you to get in touch. You can get in touch with us through our website or give us a phone and we can put you in touch with one of our EPOS consultants who are working with businesses like yours every single day, making them more streamlined. And what we'll be suggesting is exactly this. Let's look at an integrated system. Our own system, EPOS, integrates directly with all of the leading accounts packages from Sage 50 and 200 to Pegasus Opera, Exchequer, Access, Greentree, and a number of others. So please do get in touch with us. This is what we do, and we genuinely believe that it can make a massive difference to your business. So thank you very much for listening. I hope that was useful. As I said, any questions, please do get in touch. Thank you very much.